Jane, does this mean that there is a revival of U.S. exceptionalism, that the dollar is back in vogue and the weakening trend is broken?
Well, it's really quite interesting because if we look at US equity markets since June, then we could be talking about that then. So, for instance, in the equity markets, you could say, well, look, this rotation trade away from US assets, which really characterized trading in the first 5 months of the year, was over. And yet the dollar in June and then actually beginning of July mostly was on the back foot. There was an attempt at a dollar revival at the beginning of July when that payrolls data came in firmer. But the dollar, I think, has been lagging this end of rotation trade. Stock markets really picked up a bid. The dollar didn't, perhaps because the market was anticipating a more dovish Fed. But I think we needed this washout in positioning. I think the market had become too long dollar at the start of the year. This rotation trade certainly caught up and characterized all US assets. But whereas the stock market began to recover, a month ago, more than a month ago, the dollar did not. And so I think this is what we've just seen this week, is this washout of positioning and this recognition that the US economy hasn't been as hard hit as we all thought it could be back in April.